Hi traders, you're welcome back to the Forex Geek channel. In this video, we are going to be breaking down one of the most powerful reversal patterns in technical analysis, all right? And that is the double tops and double bottoms, okay? Now, these patterns appear all the time in the market, and if you know how to spot and trade them correctly, they can give you a huge edge. So stick around because I'll be showing you exactly how to identify, confirm, and trade double tops and bottoms with precision so you don't get caught in false breakouts. Now, before we dive in, make sure to hit that like button and subscribe if you want more expert trading strategies. Okay, now let's just get started. First of all, let us define what double tops and double bottoms actually are. Now, these are trend reversal patterns. Okay, that signal a potential shift in price direction. Now, as for a double top, right, a double top pattern forms at the end of an uptrend. You can see here, this is an example. We had an uptrend here, right? And you can see a double top pattern formed. Double top simply means it touched the top two times, as the name implies, okay? It creates two peaks at the same level, indicating that buyers are losing control, all right? It forms at the end of an uptrend when price fails to break resistance twice, okay? So these two peaks are created at the same level, indicating that buyers are losing control and sellers are stepping in. Then for a double bottom occurs is just the opposite, right? A double bottom is just the opposite. Let's see if we can find a good double bottom. Okay, so we have one here, right? We have one here. So double bottom is the opposite. It forms at the end of a downtrend when price fails to break a support level twice. Now, this signals that selling pressure is weakening and buyers are ready to take control. Okay, now once you recognize these patterns forming, you can use them to anticipate potential trend reversals and plan your trades accordingly. Okay, now how do you spot double tops and bottoms on the chart? How do we identify them on the charts now that we know what they are? Okay, for a double top, just look for an uptrend. All right, look for an uptrend before the pattern forms. The price hits a resistance and then it pulls back and then retests the same level but fails to break higher. Then the second peak should be around the same level as the first. Okay, so it forms an M pattern, right? It forms an M pattern. You can see this. It forms an M pattern. All right, an M shape. So a confirmation signal occurs when price breaks below the neckline, which is the low between the two peaks. The low between the two peaks. So when you have a break of the neckline, that is a confirmation signal. You can then enter in the direction of the breakout. All right. Now, for a double bottom, you look for a downtrend. Okay, for a double bottom, you look for a downtrend. All right, you can see what happened here. We have a downtrend. So you look for a downtrend before the pattern appears. Price hits a support level, bounces up, and then retests the same support but fails to break lower. The second bottom should be at a similar level as the first, forming a W shape. As you can see, it forms a W shape. All right, forms a W shape. Now, a confirmation happens when price breaks above the neckline. The neckline is the high between the two bottoms. Okay, the key here is waiting for confirmation before entering a trade. Do not jump in too early. All right, do not jump in too early. Now, how do you trade a double bottom or double top effectively? Now that you can identify double tops and bottoms, let us talk about how to trade them correctly. All right. Now, as for a double top trading strategy, you wait for price to form the second peak. All right. You have to wait for the price to form the second peak. Then you identify the neckline, which is the lowest point between the two peaks. This is the lowest point, right? Then you enter a sell trade once the price breaks below the neckline with strong momentum. Then you set your stop loss above the second peak. All right, your target should be equal to the distance between the peaks and the neckline. All right, so if you have the distance between the peaks and the necklines, say about maybe about 200 pips, then your potential profit target should be about 200 pips as well. All right, so we would have been exiting somewhere around here. Okay, then for a double bottom trading strategy, yeah, it's just a similar, right? It's just a similar strategy, right? But you know, in this case, it's just the opposite. So you wait for price to form the second bottom, then you identify the neckline, right? You identify the neckline, the highest point between the two bottoms. After that, you set your stop loss below the second bottom. Then your target should be equal to the distance between the bottoms and the neckline, meaning our profit target should be around here. And you can see that it's kind of accurate, because after that you can see that a reversal actually happened. Now, this risk management approach helps you trade these patterns safely and effectively. Okay, now how do you avoid false breakouts? Because not every double bottom or double top will lead to a reversal. Now, here's how to avoid false breakouts. First of all, wait for confirmation. Okay, do not enter until price clearly breaks the neckline with strong volume. So you might want to add the volumes indicator so that you can use volumes to confirm breakouts. All right, you can use volumes to confirm breakouts. Now, after that, you check for divergence. You can actually use RSI or MACD, or any other momentum indicator to check if momentum is weakening before entering. All right, just check if momentum is weakening before entering. All right, then you can use multiple time frames. Confirm the pattern on a higher time frame for stronger signals. As you can see, this is the daily time frame. It's good to confirm the signals on the higher time frames. And then avoid trading in choppy markets. Double tops and double bottoms work best in clear trending markets. Okay, and that is how you trade double tops and bottoms. These reversal patterns are simple but highly effective when used correctly. If you found this video helpful, hit that like button and drop a comment below. Let me know which pattern you use most in your trading. Subscribe to the channel for more powerful trading strategies, and don't forget to hit that notification bell so you never miss an update. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.